if they come into some money, if they get a windfall, maybe get inheritance, maybe they sell off a property or an investment, maybe you have a game plan, maybe you're going to invest in something in the future. But this, first and foremost, think of it as where you're going to save the money and you're going to get the best growth out of it, highest percentage.
What's up, beautiful people? Welcome back to the podcast. Today, I am joined by two amazing gentlemen, two titans in the industry. We've got Shadi and we've got Peter Sr. here. Go ahead and cut over to you, boys. Shadi, say hello to everybody.
Hello, everyone.
And Pete, how we doing, my man?
Hello. Welcome to the podcast.
So today, guys, I guess I'm lucky enough to kind of join you. And from what I understand, we're talking IULs. It's a topic I don't think that gets enough love, personally. A product that doesn't get enough love. We all know burial coverage. We all know final expense, right? That's kind of where we cut our teeth in the industry. At least that's where I cut mine. Mortgage protection, we know. And then there's that retirement income planning side of things, right? There's this ideal of a universal policy, not quite a whole life, not quite a term. I think this is definitely something we should dive into. Who wants to kind of kick this off and get us going?
Go ahead.
Sure, yeah. Well, the IUL, it really got me excited when I was first introduced to insurance. In general, it's kind of ironic. My mother sold insurance for my whole young life. And so I've heard all these terms and known a lot about insurance for quite a while and just never considered it. I guess you don't want to do what your parents are doing kind of thing. But having been through a lot of different businesses and started my own businesses, when I looked at this and saw, how it worked and what it did for people, how much you could help people, sure. I got pretty excited about it. So dug right in.
Okay. Well, what was it in particular that kind of excited you about it?
Well, I always look at leverage. Whenever I want to do business, I want some kind of leverage. I either leverage my time by having other people work for me, or leverage my money with investments, things like that.
Sure.
So this is a way that ordinary people can leverage their income so that they're better set up later on, especially in case they can't earn income.
Okay. I like that overview. Shadi, you want to kind of add to that, or?
Yeah, sure. The one thing I like about the IUL, man, I mean, it's a great product, right? And people, I mean, it's self-explanatory. It's self. One of the things
to
I
some
do,
degree, right? To some degree, yeah.
I mean, it says itself. I mean, you have a retirement plan, tax-free income. According to tax code 72E, your money gains is tax-free, and you can take access that money tax-free as long as you don't go over the MAC. I mean, it's definitely a great product too. And again, you have the life side of it, life insurance. You have the living benefits. It sells itself, and yes, it doesn't get much love, but it is definitely a way to grow growth and help the agents.
Sure.
To generate, generates wealth, as well as helping the clients to generate their own wealth as well. So everybody wins.
So let's talk a little bit more about that, right? So I know it's not supposed to be dubbed this an investment tool, right? An investment vehicle, but to some extent it is, right? So let's say putting this up against a IRA or a Roth IRA, or if I'm just going to put my money into the stock market in general, right?
Well,
why wouldn't I?
A lot of people make comparisons to other investment vehicles, which of course I'm not an investment, advisor, just a simple insurance agent. But people want to, like I said, they want to leverage their money so they can make more money. They want to put their money to work. So the first step in doing that is you got to save some money.
Sure.
So you work or you do your business, you do your job, and then after you pay all your expenses, you get that extra money at the end of the month. Instead of going and blowing that on whatever we like to blow things on, right. If you can put some of that away into some kind of account somewhere, well, the best account to put it in is the IUL, because if you put it in a savings account, you're going to get very minuscule interest. Sure. If you keep it in your wallet, you're going to spend it. Right. If you put it in IUL, it's going to grow compounded interest, tax-free. That's what it does. It's very in the simplest form. That's what you're doing. It's a savings account, and it's sort of I call it an enforced savings account, because you're going to make that payment every month.
Right.
You put that money in there. It keeps you enforced savings account.
I like that.
You have to have that mentality that this is out of your budget.
Right.
Make the amount, as I was trained by Shadi and other people in the business, make the amount that the customer is going to pay affordable for them. It's a long haul thing. You want them to be comfortable, not uncomfortable. You want it to be an amount of money that they can handle. Right. The other thing is, if they come into some money, if they get a windfall, maybe get inheritance, maybe they sell off a property or an investment of some kind. And then they have, they got a chunk of money they want to put in. There's ways to also put that in. And so now you've got your money saved. Maybe you have a game plan. Maybe you're going to invest in something in the future. But this, first and foremost, think of it as where you're going to save the money and you're going to get the best growth out of it. Highest percentage, tax-free, compounded interest. Right. That's the IUL.
That tax-free part is very alluring, to say the least. In terms of putting it into this vehicle, it sounds like, and correct me if I'm wrong here, it's pretty safe, right? Given that there's, well, I'll let you explain.
Sure. As far as safety,
right?
Yeah,
right,
there's,
right.
well,
conservative.
If you put
you double what you'd like.
Put the money into a bank account, you can put, I think, something like $250,000 in your FDIC insured, if it's a federally insured bank account. But even the federal government is looking at not paying their bills, defaulting on the government debt. Whereas insurance companies, like, some of the ones I write for, they've been around for as long as 175 years. A company like that has always paid its bills, always made right on its agreements, and they have tons and tons of money. They are the go-to place for even banks to put their money. Banks have IULs. Banks want that compounded interest as well. So it's extremely safe.
I like that. At least for one of my buckets, right? Shadi, give us a little bit more info there, right? Let's dive into that some more.
He basically took all the word out of my mouth there. So it is, it's definitely a safe place. It is risk-free. And the way I usually is I compare it with Roth IRA when I'm talking to my client about it. I mean, everybody talks about 401ks and IRAs. And the thing is, what they don't realize is all employers, they support the 401k, but they're not supporting the IUL. And the reason is because they can report that on their taxes when they're matching the employee. And, sometimes like the client be like, well, my employer matching my 401k. I basically let them know they don't do that because they love you. They do that for their tax purposes. Right? They're doing it because they want to save money on their taxes. That's why they're doing it. They're not doing it for you. Right? And the reality is, with 401k, yes, you can do that. With IUL, you might not. But here's the thing. With IUL, you actually have, it's a flexible premium. You can put more than what the premium is if you want to, invest more into it or, put more into it. It's an account that's compounding interest. And again, if you look up tax code 72E, it's tax-free. It gains tax-free.
Right. Gotta love that. Keeps it out of Uncle Sam's hands.
Exactly.
To some degree, I guess. Right?
Exactly. So.
Okay. Yeah. One thing I kind of want to touch on. I mean, we could dive into this all day. I love the IULs. Living benefits. I don't feel like we've even touched on that. I personally have an IUL myself. Love it for all of the said reasons. One thing that really stood out to me, and something I drive home in the home is just that, is the living benefits. Yeah, the death benefit's cool, cash value, it's gonna grow tremendously. But Bob, Mary, if something happens to you where you don't quite die, you can actually tap into this and see some of that money come to you before the worst happens. And it's just one of those things in which, unfortunately, we see day to day. I just had a friend who put up a GoFundMe. Something's going on. Forgive me. I want to say it was like a tumor in the head, brain tumor. It's going to cost X amount of dollars, right? And I see a GoFundMe for $10,000 so that this lady can pay her expenses, take care of her health bills. And she's young. She's 34 years old. Like, that's a very sticky situation to kind of be in. She's asking for money to kind of pay down, these expenses that are just ultimately going to stack. If she had a policy in place, I mean, you guys probably know the numbers like the back of your hand. What would a $100,000 policy cost her? Let's just say she got it a year ago at 33 years old. She's super healthy. Only now was she diagnosed with something. She's got, let's just say, a $100,000 policy that, she's, building towards.
Depending, if it's term or whole life or IUL. Sure. But let's say she gets a term or anything like that, it'd probably be about $30-$40.
Wow.
So, she wanted to save that $30-$40, for other reasons. And now she have a health issues, and she can't get it anymore, And that's the thing is people wait because they think they're too young. They're like, okay, well, I'm young, so I don't need it.
Sure.
Everybody needs it.
Right.
Everybody needs it. It doesn't matter how young my son has it, and he's
Right.
It's about to be 3.
Right.
If my son has it, why can't you? Seriously. Or it's the reality is it's not a matter of if you're gonna use it, it's a matter of when.
Right.
We all going to get sick sometimes. We're all going to die one day. It's a reality. It's not a matter of if, it's a matter of when. It's like we're gonna use it sometime.
Right.
Yeah.
So in some way, shape, or form, right?
Yeah, I mean, behind it, people don't want to talk about their retirements or their
death and finance,
their death and their finance and all that fun stuff. They don't want to talk about it, right? They believe in that. Like I had this client, and I shared this. I shared this very quick. This client was like, I want to have a $25,000 a year for life when I'm 65. How much do I need to put in? I did the little calculation on the illustration, and I was like, okay, you need to put in about $500 a month for the next 20 years. And she was like, oh my God, this is a car payment. And I'm like, wait a second, you comparing car payment to, I had to call her out on that. And she compared the car payment. I'm like, ma'am, there's 2 things in life. When you do your expense, there's 2 things. There's asset and liability.
Okay.
Your car payment's liability. This is an asset. Asset what makes you money.
Right.
Okay. So you want the tax-free benefit, it's right there. Like it's not making sense. You know what I mean? So
those are the homes you got to push a little bit more.
Exactly. I mean, and you just have to be real. That's all it is. Yeah. And I know Pete is actually very real with his clients. It's just the way it is. Here what it is. Yeah. Being real with them is what sells it. It's not. We're not faking anything. We're not saying things that are not true. Right? Sure. We're being very truthful. We're being very real with them, and let them know exactly what could happen.
Sure. Yeah. Even though it might come off honest, brash, what have you. Yeah, super important to do so. Pete, you got something to kind of add to that?
Yeah, well, you guys touched on a lot of things there. Going with the living benefits, the IUL, it can pay you if you get a critical or chronic or a terminal illness. Different amounts, could be monthly, could be a lump sum.
Right.
But if it's like they say, that life insurance, it's for the living. You're going to be able to use this while you're alive. I mean, especially if you suffer and get a terminal illness, to have some money to spend on your bucket list or to take care of your family or even just to use for your own health. Like hopefully your friend gets to do for her problem. It's the living benefits are a fantastic portion of it. And we do sell the IUL, but we also sell the other insurance. So if someone comes up and we address their needs, take a look at their situation, find out what the reasons are why they're interested, and they need a lot of coverage. Maybe they've got some kids or they've got some elderly parents, and if anything happened to them and their income, the family would falter. They'd really be in tough straits. We might sell them an IUL, but we might also just sell them some term insurance or a whole life policy, whichever is going to suit the situation,
the client.
And for the client, the other thing you guys touched on is the honesty. I like being an agent because as an insurance agent, one of the things that is taught and you make an oath to is to be a fiduciary. And a fiduciary is someone who takes care of the client. 100% of my thought and knowledge and experience goes into finding the right product for you, the customer. Yeah. I'm not there just trying to make a buck. I'm looking for everything that's the perfect fit for you. And if you have existing insurance, I'm going to analyze that. And if that should remain in place, that's what I'm going to tell you to do. I'll talk myself right out of a commission because you've already got what you need, or part of it. Maybe we keep part, but more times than not, someone sold you something that isn't exactly right for you right now. I'm going to analyze that. I'm going to show you why, and we're going to put you into a policy or multiple policies that are going to do what you need. But the thing I really like about the IUL is the flexibility, because I can take a policy and make it do something that you need it to do now. Like say you want to protect your mortgage. It can have a high enough death benefit to protect your mortgage, but I can have that death benefit diminish over time so you're not paying for insurance that you need. Later on, it'll be a lower death benefit and your payment can maybe stay the same or increase as your income perhaps is going to increase. And then you're having more money that you're saving towards, say, retirement or maybe saving for a major purchase. So we'll build up that compounded tax-free interest, and then you can borrow from the IUL to make those purchases. And then what I recommend is that you pay that back. Pay it back into yourself, into your IUL. Pay it back with some interest, just like you would pay the bank that you might have borrowed from. then say you have another event, you'd be able to borrow it again. Or as you get older, maybe you're not going to be working anymore. We can then structure it so it turns around, and now the IUL starts paying you. It can actually pay you every month instead of you paying it.
Tax free.
They have a fantastic thing where it has a lifetime income setting. Just huge. Turn it on. Right. So it really sets people up so they're in a much better place than just worrying about what the future holds.
Well, you sound very, very passionate about it. That's for sure. It is a phenomenal product. Let's elaborate a little bit more, like on the details. You can get into an IUL at how young, and then up to what age?
Since from birth, I believe, right, Chadi? Yeah, and what up to what age? I don't know if there's a cap on the age, but
that's from day one till age 75.
75,
right. Through NLG, at least it's the highest that I know of, right?
Yeah,
that's incredible, though. I mean, to think that like you have this amazing product available to you for 75 years. I mean, that's kind of a big deal.
175 years.
There you go. Yeah. There's
or 75 years for the person. Sorry,
right, exactly. Well, they have an opportunity to get into it, right? I don't think there's there's always a better time, younger and healthier, right? But I've helped clients out, I should say, and this is the point I guess I'm getting to is this isn't necessarily for some young buck who's 20, 30 years old. You can still do things down the road, 50, 60 years old, right? Provided you get approved for it, you can still set yourself up. Whether
you do have to be healthy and get approved, and that's why it's important to do it now. You feel like you're healthy. I felt like I was healthy, till a year and a half ago. I had a heart attack, and now that completely changes my situation.
Perspective.
So it can happen to anybody.
Right. Agreed.
Yeah. Shadi, you got more you want to kind of add to this?
Not much. I mean, it makes sense in there. I mean, people think that, oh yeah, I'm healthy, I'm athletic, or I'm whatever. Nothing gonna happen to me. I'm not gonna die for the next 10 years.
I'll just save the money.
I just save the money. I mean, I got that before. I'm like, dude, if you put $100 in your bank account, and you die tomorrow, your family gonna have $100. I mean, you put $100 into this, you're gonna have an X amount of dollars when you die, right? So the one thing that a lot of people don't understand is the value behind it. They value and here's the thing. I'm really good at one thing. I'm really good at calling the client out. I'm not afraid to say things the way they are, even if it's gonna hurt their feeling.
Sure.
I'm just gonna be truthful. The one thing I do a little different is call them out on their cable. Why would you be willing to pay $200 a month on your cable, $500 a month on your car payment, and whatever, $700 a month on Tesla, but you're not willing to spend however $300 a month into a retirement plan, or $100 into a life insurance that's gonna protect your family? Right. It's just not making sense.
Into an asset versus a liability.
Exactly. Like I said, asset and liability. You're choosing your liability over your asset. And that's why, and I do call the client out on that, like, Mr. Client, with all due respect, the reason you feel like you cannot afford this today because you made bad financial decisions in the past. Don't make the same one today.
Ooh, man, that's powerful.
And I call them out on it. Today, we're going to go ahead and get your retirement plan in place so you can have a good retirement. Because here's the thing. Today, you're making $3-4 grand a month. Today, you can afford this. But you have no retirement plan in place. When you're 65... okay, you're a truck driver. No offense, Mr. Client. You don't have no retirement plan in place. You're 1099.
Right.
So that being said, being a truck driver, when you're 65, you're going to be living solely on your Social Security, which will probably be anywhere between $500-600 to maybe $1,200-1,500. Can you live off that? No? Okay. Then you already answered your own question.
Right.
We're going to get this done. We're going to see if we can get you qualified, and we can get it through for you. And it's a 3-signature process. We're going to finish the first 2 today and the third one within a week.
Oh, closed.
Right then and there.
That's awesome.
Yeah.
And it would make sense. It would only make sense, right? Like this guy or gal, whoever you're sitting with, right? Not only are they're killing 2 birds with 1 stone. They're taking care of their life insurance, but they're also planning for retirement. I mean, it seems like a no-brainer, especially for somebody who has no retirement plan. And let's be honest, if you're not sitting with a financial advisor, who is really planning out their retirement? Who's really sitting down and kind of crunching all of the numbers, thinking about, okay, well, how much do I want to have after, let's say, 60, 65? What's my annual income looking like that? Looking at that point, I don't think enough people are sitting down and talking about these things. They barely want to talk about the life insurance part of it, let alone the, hey, you got to look a few years ahead and start saving now kind of thing, right?
Yeah, people don't understand the value behind that until they get into a position where they're on Social Security. And that's when they're actually in a hole and they can't do anything anymore, you know?
Totally.
So the way I look at it is when we're pushy to try to get somebody to sign up, it's not because we're hungry. Yes, we're hungry. We want to make money. I understand that.
Sure.
We wouldn't be in business if we're not making money. But the reality behind it is we're in it to protect those families.
Sure.
Because I will feel really good when I know a certain client that I did and protect their retirement. They're 65 today and they're collecting 100 grand a year. I'm going to feel good about myself because I did something good.
For sure.
Now they're collecting 100 grand a year because of something I did for them. Does that make sense? So in reality, you know, it's something that is necessary.
Sure.
Okay. Otherwise, I mean, I've seen clients, man, when I did the final expense and, you know, the mortgage protection, all those leads, I walked into client home. They were like, you know, retirees, 66, 67 years old, and they're sitting in the assisted living home, and they're taking all their Social Security just to live there.
Right.
And I've seen it happening. I was sitting there and they had to ask permission from the assisted living home to buy a policy because their money's not there, just going to the assisted living home. They're keeping all their Social Security for them to live there. Right. So why would you have to put yourself in that position?
Sure.
Why don't you just get something now? You can afford it. It's not $300-400 a month. It's not a lot of money for somebody making $4,000 a month, right? $400 or $500, $500, whatever it is. Invest into something. So when you're 65, you have your insurance in place, you have your living benefits in place, and that starts day one, of course. And when you're 65, you have your retirement plan, you have your tax-free, it's all tax-free, and you have your Social Security. So now you're not depending on the assisted living to be able to buy stuff that you really need. The reality is people don't do that now.
Sure.
They value their asset, their liability beside their assets, and they put themselves in a big hole where they can't even get out of it anymore. And the more they keep buying liability, the deeper the hole is. The deeper the hole is, the harder to climb out of it.
Yeah, this could turn into a financial education podcast real quick.
It is.
That is the truth.
The reality, though, it's being real with them is what it is, you know. And when I'm sitting with the clients, that's exactly what I do. I just let them know exactly what it is.
Sure.
You know, this is a liability, that's an asset. Do you understand the difference? And when they tell me, that's when I'm moving forward and start, you know, they're
on the same track.
We're on the same track at this point. You understand what liability, you understand what asset, so you understand what we're doing here. Right? And I let them know exactly what we're doing. Yeah.
I think what I grab from that, I guess to kind of like boil it all down, right? It's this discipline or the sacrifice now, right? Instead of the regret later. Right? Putting all of this in place now. It's not fun to talk about. That's how I open my conversations, my appointments. All right. You know, Bob, Mary, let's get the formalities out of the way real quick. Here's my license. Snap a photo if you'd like. Okay, quick. I just want to have a conversation now. So, Bob, Mary, I understand that we're going to be talking about death, finances, just add politics and religion, and we'd have all the subjects we don't want to talk about. But today, it's important that we do so. And if you have it now, I always say, look, if we do this now, get it knocked out, we never have to do this again. It's kind of a set and forget. Now, Peter, you've got clients that you kind of check in with from time to time, right? Like over the course of this relationship, right? It's a little bit different from just walking in there and just kind of.
I like to tell the client, first of all, even before we've made a sale, you know, establish rapport, get to know them, and they get to know me, and it seems like, you know, we're getting along. I tell them I'm going to be your insurance guy for life. Like, you know, this isn't the last you're going to hear from me because, first of all, with an IUL, every year you might want to reallocate that. Sure. You know, we're going to go in there. The IUL, the illustration that we send to the customer, it's really a plan. You know, it's not fixed in stone, but the initial setup, it's going to last about a year, and then every year you can make major changes. You can make minor changes throughout the year, but the major changes depends on how the markets are doing and, you know, what you might want to do. Most of the time, you can just leave it alone. It's going to be fine. But I'm going to check in because their life situations change. They might have another baby or something like that. A lot of clients, we like to, set up with what we call a baby millionaire.
Yeah.
Put about $100 a month into a policy for a young child, and they're going to have well over $1 million come retirement age. And that's a world of difference for most people. Most people don't have an automatic thing where they know they're going to be okay,
right? I guarantee
when they get older. So that is amazing. And then some clients, it's kind of the opposite of what Shadi was saying, where they're saying, "Oh, I'll just save the money," which of course is ridiculous.
My favorite.
I shortchange them. I go in there with, $100 baby IUL and talking about, what they could do, at least maybe, $300-400. Ask a client, how much single mom, she's got 2 kids. What kind of expendable money do you have at the end of the month? And she tells me $3,600. And I'm like, like after your expenses. She's like, yeah, that's
wow.
I'm like, okay. So, well, what were your goals? She's like, well, I have 2 daughters, 11 and 9, and I want them both to have money for when they get out of college. So I'm like, okay, well, let me try to figure out how I'm going to set it all up because, it's flexible and everything.
Right.
And I said, okay, well, about how much money? She's like, I'd like them each to have $500,000. Oh, okay. So I'm backing up from $500,000 how much she needs to put in. It was the opposite problem. I had to figure out how to get enough money into the IUL so that the kids would have what she wanted them to have,
It's a good problem.
She had the money. She had, and then she's like, I've also got a fund. I have a little money. She was kind of being coy about it. And ends up, she's got a bank account with $1 million cash, a bank account earning nothing interest,
right.
So that's someone who is going to have money in their IUL that's going to be a legacy, for her daughters and their families, and even be able to look at philanthropy and, do something really good for other people with that money. And the way it can grow in an IUL, it's going to be nice.
Man, you just touched on something there, and what the power of what you can do when you're not, let's just say in the rat race, when you're not having to work every day, check in somewhere, when you have the freedom and time and the money to go off and truly make a change in the world, right? And don't get me wrong, we're serving our community in the way that we know how. But when you're, let's just say, relieved of that at such an early age, with all that energy and ambition to go out there.
It's cool. And it reminds me of what people say about the IUL, that this is what rich people do with their money,
100%.
Yeah. So big numbers. I have one agent who works under me. He's working on a multi-$100 million IUL policy.
Whoa.
With a friend of his who's a billionaire, So when you're a billionaire, multi-billionaire,
sure,
you got to do something with this money too. So he couldn't get with the guy because he's in the middle of buying a business, and I'm like, he's buying a business. Is that gonna, upset the apple cart there on trying to get that big IUL? And he's like, oh no. That's just that's just like another $50 million business. That's nothing. He has plenty of money. It's ridiculous. But where are you gonna put it? Put it in IUL.
Right. So I'm curious about this client here. So I guess for agents listening, watching, if they're prospecting and they're finding these clients that are in a position where they've got $3,600 at the end of the month to kind of put into, let's say, a vehicle that can, do something for that client, what would you suggest maybe for them? How should they kind of navigate those waters? Maybe when they're first starting off.
Well, if they're first starting off, and if their upline doesn't have enough experience with that, they simply can call the insurance company, and they have plenty of people who will walk them through what would be the best for the client. And that's what we do as agents. We seek the people in our companies or in the life insurance companies that we work with to get the best information for the client. Again, being a fiduciary, we're going to look for what is best for the client, and we'll definitely have that information. We're not going to just fly off the cuff and tell them whatever we're thinking. Sure.
Okay. Pete, while we're on that note there, and just kind of in closing, because we're kind of wrapping up, if you have agents, if an agent wants to work with you and they've got ambition to do so, whether it's IULs or just insurance in general, where can they reach you? How can they kind of get a hold of you?
I have a website that is moneyfl.com, MONEYF like Frank, L like Larry, moneyfl.com. And you can go there if you're a client who wants an IUL or other insurance. You just submit the form there. Or if you're an agent, there's also another webpage there for people who want to work with us. You don't have to be an agent. Just if you're interested in the business, then submit your information there, and I'll give you a call, or one of my agents will give you a call, and we'll help you learn to become an agent, which is a great business. You're really helping people. I mean, we measure our company under the leadership of Shadi here. We don't look at how much we sell in dollars. We count how many families we help. So when we go bragging to each other, it's how many families did you help last week?
Right.
So it's really, I mean, think about that. You're working for a place where you're being judged by how many families you helped. That's pretty cool.
Yeah, gotta love that kind of culture.
I love it too.
One more time, Pete, the website that they can go
Moneyfl.com.
to. Got it. All right. And Shadi, how about you, my man? In closing, any final words? Again, agents wanting to reach out, work with you.
They can always reach out to me at my cell, 614-370-8737, as well as they can always reach out to our site at eaglesfinancialplanning.com.
Okay, eaglesfinancialplanning.com. Got it. Anything in I know we covered a lot, plenty of info here. I'm sure the community will find value. Anything outside of that you kind of want to leave them with?
Not necessarily. Beside that, plan your retirement right, plan your future right, plan your death benefit right, because not matter if matter when you're gonna have to use it, and tomorrow's not promised. I mean, we all have an expiration date on our butts, and only God knows what it is.
Stop procrastinating, basically, is what
exactly.
I hear. Let's get on
Stop
top
procrastinating and get it done.
All right. Thank you again, beautiful people, for joining us. We'll see you guys next week on the podcast.